The engineering term I kind of give it is a way to recapture the interest that you would have given away to the banks or other lenders using a properly structured whole life policy. So a dividend paying whole life policy. But let's dive into some of the problems, because the infinite banking concept has been around for a long time. Whole life insurance has been around longer than Canada's been a nation. So it's nothing new. Why isn't it more of a household name?
It takes money out of financial advisors' control. It takes money out of the financial services industry's coffers. And that is predominantly where 99% of the money is held. So if it's now going to interrupt their bottom line, they're not going to want you to know it. Nobody was in the stock market. Everybody bought GICs, had a bank account, had permanent life insurance, and then suddenly it all shifted. And now everybody who has a heartbeat seems to think that the stock market's the place to be, because the narrative changed from those who controlled the money. Get it out of the safe where they couldn't control it because you locked it away, and now have it liquid where they control it. And I mean they, not the individual. They, the 1% that control the money.
I guess that's one of the problems I see with the infinite banking concept is the stock market. You mentioned the stock market. It's so emotional, right? And that's one thing I learned. It took me about 2 years to learn this in the financial industry, that money is not necessarily just math. It's very emotional. And the stock market, it's almost like a roller coaster ride. It can be extremely fun, very scary. The ups are never enough, and the downs hurt so much. Where you get this infinite banking concept, it's kind of like just a steady eddy. There's no downs. It just continues to grow.
It is called boring. Pure and simple, it is boring money. The infinite banking concept, what you do with your money is sitting inside of the whole life insurance. That's it. You're sitting in that roller coaster, and you are completely safe and secure and tied in with no risk of loss. But it's what you decide to do with the money that can create the roller coaster for you.
Yeah, you could make life a lot more entertaining and more interesting if your money's being boring. That's a good way to look at it. Another problem I see, and you mentioned it, so one of the problems was sometimes you just can't change people's minds. They've done one thing, that's the way they're going to continue to do it.
Wall Street needed some sort of marketing slogan to get people to shift away from the safety of permanent life insurance. The design wasn't available the way it is today. So you were buying life insurance as a death benefit, and therefore it was more expensive. So as soon as you could offer somebody life insurance as term insurance, which is a whole lot less expensive, people are going to gravitate to it. But the value is 98% or more of all term insurance never pays a death benefit. Because by the time you hit 65, you've canceled the insurance. Is the time period when you are least likely to die. That's why the term insurance is so cheap. It's not because the insurance company is giving you a deal. They priced it based upon the risk.
It wasn't until I was introduced to the infinite banking concept and dove even deeper into different insurance policies, seeing that you can really structure it properly where it's not expensive, but you can use that money while you're living very, very efficiently.
So unlike any other retirement plan, this one, first and foremost, is based upon health. There is a potential where somebody is not insurable, but we have the ability to still utilize the concept on anybody else in their family, in their bloodline, where there's an insurable interest. Children, spouse, brother, sister, they're not going to be the same size of policies because there's less of a financial interest on your brother than there is on your spouse.
If you want a properly structured dividend paying whole life policy and you're in bad health, you're not going to be able to get this, but you just mentioned you can actually have it set up for a family member and utilize it that way.
Yeah. And it's what the Rockefellers do, where they just keep having insurance policies on everybody. The grandparents, as soon as a child is born, open up an insurance policy on that grandchild and start transferring the estate intergenerationally, tax-free, to that child. And eventually they have so many of these individual little banking policy is set up, that individually they're small, but collectively they're called a family bank. They are still one of the richest families in the world and have held on to that money for over 100 plus years.
Just passes on tax-free to generation to generation to generation. What's another problem that you see with IBC?
Everybody out of the 37 million plus people in Canada are uneducated when it comes to this concept. It can be really sexy illustrating it one way, but that's not the real world scenario that it's actually going to be able to live up to. That if you're going to come out with a concept that is vitally important, that every Canadian readjusts their financial DNA by inserting infinite banking into it, that it's done with the right philosophy. They might be going down a path which will help them. It's just not as efficient as it could have been.
A lot of advisors or the banks, they don't talk about this. Advisors that do talk about it usually make it very insurance heavy. It's not a cost effective to the client. And there's more than one way to peel a potato. And you can actually make this very efficient and very inexpensive. But why don't most advisors do that? I would say only 10% of the 10% that talk about whole life actually set it up the way that the members at the Infinite Banking Canada Group do.
Because you really have to be willing to take a dramatic cut in compensation. So we all know if we look at a specialist, anybody who is a specialist in their field are the ones who earn the top dollars. We are specialists in our field, but we're willing to flip that upside down and actually reduce our compensation to ensure that the vast majority of Canadians, one, can implement this concept. Two, we only have so much money coming in the front door. And if we can recapture as much of that as possible by lowering our compensation and having that money go back to you, isn't that just in the best interest of everybody? More people get to use it, control the banking system. I like to think of it as, you ever heard of the McDonald's principle?
What's McDonald's principle?
You can make $1 off of 100 hamburgers, or you can make a dime off of 1,000. Lower the costs down, have the volume, because people will appreciate the, what you're doing in the value, and get the idea out there into as many hands as possible.
I find when the infinite banking concept is set up properly, where it gives the client control and flexibility of their own money, that's going to give them ability to make their communities even stronger. Communities where we can raise our kids and add to the prosperity. Instead of having to worry about taxes and losses and all that, we can actually focus on what's really important. If the policy is not set up properly, it kind of gets rid of a lot of those benefits that we've been talking about.
It's not that the policies are not correct. They're just not as efficient as they could have been, as beneficial to the client as they could have been. And you're not going to know that unless there is an alternative that you were shown or that you can look at, or an alternative group like ours where you can have that conversation. It's not for everyone. Unfortunately, there is a very large portion of the population that financially are just scraping by. It's one of those where you have to have capital cash flow. So for those people who can't afford to do RSPs or TFSAs, or they're trying to save up all their money for the down payment of a house, or no matter how great this concept is, sometimes it's just not something you're going to be able to get access to.
It's very powerful when used properly. And when you have the ability to do this, it's a game changer. But you have to first have the ability to do it.
I know that they are not financially available. And I'm not talking about the fact that you have to be earning six figures. I'm just talking about the fact that you have positive cash flow. Can't really help somebody if they've racked up $80,000 in credit card debt and they keep adding $5,000 to $10,000 a year to that, or they use their house as an ATM machine and every 3 years refinance it to pay off the debts, but then don't change their habits.
What steps would you tell them to take right now?
You have to continually educate yourself regarding what infinite banking is. Watching our videos, our website, getting in touch with an authorized practitioner who's going to be a coach with you for the rest of your life. Those are the steps you need to take.
Reach out to IBCanadaGroup.com. .ca works as well. There's a ton of valuable information on there, and there's a link to reach out to an advisor that is in your area.